Stocks posted their worst day since early June on Wednesday, pushing market volatility to a 4-month high as uncertainty over election season clashes with a startling surge in coronavirus cases. But with just 6 days to go until the election, the height of volatility could be yet to come, as experts eye the possibility of a contested election to really ramp up uncertainty. Fueling volatility, the economic recovery in recent months has been sluggish and uneven, with indicators like retail sales completely recovering and some, such as home buying, surging to more than 10-year highs, all while millions of Americans remain unemployed and weekly jobless claims struggle to recover. Elections can get messy, and given that the pandemic will likely alter how the results are received with an increase of mail-in ballots, we expect markets to maintain an elevated level of volatility leading up to, and possibly beyond, the November 3rd election day, says Allianz's Ripley. Traditionally high election season market volatility has also been compounded in recent weeks by a drawn-out back and forth in Washington over another round of fiscal stimulus, and adding on the recent surge in coronavirus cases seems to have marked a tipping point for the market. After spiking at 38.28 in early September, the VIX tapered down to the mid-20s by the end of the month, roughly 40% below current levels. The stock market is telling us that COVID-19 isn't going away anytime soon. Rising cases and lockdowns in Europe are raising fears of renewed lockdowns in the United States, and the record rally from the March lows and presumed recovery has likely come to an end, says McDonald. Expectations that COVID-19 would be under control by now have vanished, and we see stocks falling by another 10 to 20% from here. We believe that if the S&P 500 breaks below 3,200 before the election, its next move may be down another 12%. Election results and when we get them. Wall Street experts, including Ripley last week, warn that a contended election could further ramp up volatility, as it naturally heightens uncertainty. When election results were last contended in 2000, equity markets sold off and credit spreads widened as a result, notes Ripley. The worst-case scenario for markets, characterized by a disruptive legal or legislative battle, could arise if the polarized nature of our political environment and the already fragile state of the economy prompts the market to price in the potential business risks of government dysfunction, LPL Financial Chief Investment Officer Burt said earlier this month, adding that such an outcome, though unlikely, could result in a correction, tanking stocks 10% or more. Brian Overby, a senior options analyst for Ally Invest, says Wednesday's level of anxiety may be a bit overblown, as current VIX levels imply the S&P could swing about 2%, a sentiment echoed by Emrich,